Welcome to FIRE's educational video series. In this video tutorial, we will continue with our discussion on technical analysis. By the end of this video, you will know the various time frames on which the concept of support and resistance can be applied. Now that we have talked in detail about the fundamentals of support and resistance and the forms in which they can appear, let us move ahead and talk about the next critical aspect, the time frames on which the concept of support and resistance can be applied. You may wonder, are the concepts of support and resistance applicable only on the daily chart? Well, this is not really true. The concepts of support and resistance are applicable across all time frames, as we saw in the last few videos when we discussed some real-time charts using various time frames. This includes the intraday time frame, the daily time frame, the weekly time frame, the monthly time frame, the quarterly time frame, and in some cases even the yearly time frame. In short, the concepts of support and resistance are applicable on charts that are as short as 1 minute to charts that are as long as 1 quarter or even 1 year. The logic and the principles of applying these concepts remain the same. What differs is the magnitude and the importance of support and resistance on different time frames. For example, a support on a 1-day chart would be more important than that on the 5-minute chart for the simple fact that the daily time frame is the larger of the two time frames. In short, the longer the time frame, the more important the supports and resistances become in magnitude terms. Let us now briefly show some real-time charts that we have already talked about previously, just to show that supports and resistances can be applied across time frames. This is the 1-minute chart. Notice how well the price held on near the first low on the second and the third retest before eventually moving higher. This is the 15-minute chart. A line is drawn connecting the two lows marked using the first two arrows and then projected forward. Notice how the price reversed higher after having touched this line on the third occasion. This is the 30-minute chart. A line is drawn connecting the two lows marked using the first two arrows and then projected forward. Notice how the price reversed higher from the vicinity of this line during each subsequent retest in future before eventually breaking below this line and moving lower. This is the daily time frame chart. Notice how well the price held on near the first high on each subsequent retest before eventually moving lower. This is the weekly time frame chart. A line is drawn connecting the two highs marked using the first two arrows and then projected forward. Notice how exactly and strongly the price reversed lower after having touched this line on the third occasion. This is the monthly time frame chart. A line is drawn connecting the two highs marked using the first two arrows and then projected forwards. On the third occasion, notice how the price reversed lower after having touched this line for 3 consecutive months. Well, that was all that we wanted to talk about in this video. If you liked our video, do not forget to click on the like button below. Also, Hit the subscribe button to subscribe to our YouTube channel and the bell icon to receive regular updates from our site. Last but not the least, we have a dedicated space for School of Stocks related discussions on FIRE's community. We encourage you to interact with us on our School of Stocks community page by visiting the link shared below. Thank you for watching this video.